accountants and CPAs. For those of you who use them, please do not assume that your CPA or accountant is actively looking for tax strategies throughout the year for you. Either you haven't, if they offer those services, either you have not signed up for those services, or they really are just tax preparers. So just be mindful of that and ask questions. You've hired these people to work for you. You should be asking those questions. So we've talked about key factors that determine your tax bill, what goes into it. Let's talk about proactively planning for taxes and retirement. So for those who are approaching retirement, there are some steps you can proactively take to better position yourself during retirement. Kyle, let's go back to you. What are some tips we can take to plan ahead for this?
Sure. And the first is just position yourself for flexibility. It's important to be strategic in the decades and years leading up to retirement to make sure that you have flexibility with regards to the income sources and account types you'll have available to you when you stop working. Fully funding your traditional retirement accounts is important, but it's also important to be mindful of saving in other places like a Roth or a taxable brokerage account. The second is to, again, reiterate to your point, Tony, is to carefully review your tax return each year. Retirement tax planning is a mix of art and science, as well as an ongoing learning experience. It's important to take the time to carefully review your tax return each year to better understand your tax situation and how it's changing over time. There could be strategic tax planning opportunities you're missing out on that could be beneficial today as well as in the future. And the third is to balance the long term with the short term. For many of us, the retirement years will last just as long as our working years. This means that a decision that makes sense in year 1 of retirement might not make sense at all in year 15. When making decisions around taxes, think about the long-term implications and not just what the impact in a specific tax year is going to be. And the fourth, which is a bit biased and obvious to us, but just work with a qualified advisor. While retirement is a life event most of us will experience, no two retirements are the same, and we fully appreciate and understand that. This becomes dangerous when generic and rule of thumb advice is given to retirees as a way to help them simplify the retirement process. Don't be afraid to ask for help. Lean on a qualified tax and financial advisor to guide you through the complexities of an ever-changing retirement landscape.